What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol RNXT for RenovoRX Inc. This is a tumor treatment company, new IPO here. On the left-hand side, we're looking at the daily time frame, and on the right-hand side, we have the 30-minute intraday time frame. A couple of things that we always do whenever we're starting with newer IPOs is mark off the opening print. We want to mark off the opening drive higher, which was obviously violated on today's session to the upside, of course, and then just the low that we have here, so down below at $6.66. Those are the three critical areas we pay attention to. Not so interested in the close on the actual IPO day, but we have that in place, and clearly we're trading much higher than that at this point in time. So there was some FDA approval catalyst that sent this thing higher, but as you know, I'm an expert in price action analysis, technical analysis, not so much fundamental analysis. So what we're going to do is shift the focus immediately over to the 30-minute intraday time frame chart and just point out that the close today was extremely strong, right? You can clearly see an influx in volume happening as we were moving higher. So more people were willing to commit volume at these higher and higher levels as prices were essentially on the go, right? So what we want to do next is take out the Fibonacci's and go from the low of today up to the high of the first initial pop. You can see that was in here on the 9:30 bell. First half hour of the day, we did make that move higher, and on the consolidation, it's not so easy to see here, but the last blue line is the 61.8, and it held into the afternoon session here. So I would say that that is, of course, more bullish than bearish. It would have been more bullish if it, of course, held the 38.2, but nonetheless, we're dealing with history here. We'll go now from this all the way on up to the high of the day, and clearly there was no pullback into the 38.2, but going forward here, that is the number that you want to watch. So I would argue, go ahead and throw a price level on your chart here at $13.21. We're going to get rid of the Fibonacci's now and just argue that underneath that, we should pay attention to the breakout point at $10.43. So from a bullish perspective, if you want to be on the lookout for a breakout here, what you need to see if there is any sort of consolidation or pullback and it doesn't just go immediately, the most bullish outcome would be something like this. So consolidation up above that number we just mentioned at 1321. After that, a breakout over the highs looks phenomenal. If it does give up 1321, you want to be patient, sit on your hands, and wait to see what the reaction is down here, closer to 1043 and or 977. I would just argue that this is going to be a support range that you should have on your radar. Do we start printing hammer candles? Let me just clean that up here. If we start printing hammers, right, something like this, indecision dojis, basically anything that would make you question, is now the time to flip long over the highs, place a stop just underneath the candle low, and then trade back up into some of that overhead structure, which likely would have built out by the point in time where this would happen. So that is one scenario if we don't just get the bullish consolidation and or break right out of the gates into the end of the week here. One thing to note is that on new IPOs, it's about 30 days before underwriters can essentially lend out shares for short sellers. So there are no shorts available here. If we go over to the trade tab, there are clearly no options in the chain either. So all things considered, you're only looking for long-sided trades. If you enjoyed today's video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.